One of the questions I get asked the most is, when do I buy a breakout? Do I buy them as soon as they happen? Do I buy them midday? Do I buy them at the end of the day? And the answer is a bit complicated. You see, this is part of the artistry, the art of trading, the part that I really like, and the part that enables skillful traders to do well and keeps the accountants from ruling the earth, right? If all it took was to be able to read balance sheets, then traders like myself would be out of business and accountants would be floating around in their yachts, right? So but let's try to narrow this down to a set of principles. First of all, in terms of, there's two different kinds of breakouts. Breakouts based on news, which is usually an earnings release, and technical breakouts. For whatever reason, a stock breaks out, institutions are buying, etc. When it is an earnings related breakout, I buy it. Let's say the company announced earnings the night before. I buy it right at the open if the stock is breaking out, because oftentimes that stock will go from 0% gain to a 14% gain in just 20 minutes or so. So you really have to jump on those breakouts as soon as they happen. Now that's if you're lucky enough for the stock to move out quietly. If it gaps up 14%, that's a whole different video. But what does Mark Minervini do about chasing gaps? He says, I want to be in before the gap. That's really the truth. You don't want to be put in a position where you have to decide if you want to buy way up on some gap. You want to be in before that gap takes place. So if it's not an earnings related move, it's a little, or a news related move, it's a little more complicated. First of all, maybe you don't even have the luxury of deciding when to buy it. Maybe you have a job where you're not in front of the computer. Then what you're going to need to do is identify purchase points above pivot areas where you want to buy, and set your buy stop limits. And then you're only going to set these when the market is behaving well. When the market is behaving poorly, you're not going to set any buy stop limits at all. But let's say you have the luxury of being in front of the computer, or at least trading off of your phone, and you've set an alert and the alert goes off. So what do? So it really depends on market conditions, and it's very fluid. When the market is really hot, most breakouts are working and extending 2 or 3 days. A perfect example of that was late spring of 2020. Then I want to be jumping on all of those breakouts as soon as they happen. When the market is maybe more neutral, when you see that maybe half the breakouts are working and half are squatting and reversing, then one thing you can do is, a couple things. You can buy a piece midday and a piece at the end of the day, or you can buy a piece at the open, and then if it improves, buy a piece near the close. There's different variations of that. There's no free lunch, right? If you buy right at the open, you're going to get a better price in theory, but you're going to be more likely to buying a breakout that ends up squatting. When the market is really poor, I'm not buying breakouts at all. In fact, I might be selling or shorting into breakouts. When the market is just tricky and volatile, then I usually wait for that last half hour or so. I've found that if a stock breaks out and is looking strong within the last half hour of trading, then the odds are much more likely that it's going to work. And one thing that I really like is, I have alarm set or alert set for when stocks move above breakout points. And I love it when I get alerts towards the end of the day. When a stock is quiet for most of the day and then suddenly breaks out with an hour or two left of the market day, that's almost always institutional buying, and those breakouts usually work. So yeah, there's no simple answer. Vary when you buy breakouts based upon market conditions, and you're only going to know that by looking at a whole bunch of charts and breakouts and seeing what other stocks are doing after they break out, especially stocks in your industry. If you're looking at a software stock breakout, well, pull up some other software stocks and see what they're doing, right? Okay, I think I've maybe beat that horse to death, but hope you found that helpful, and let me know if you have any questions or comments.